Hey everybody, so I'm super excited that you were able to get on. I'm very excited to share what I'm going to share today. So just let me get 1 second. Okay, there we go. All right, so today I'm going to be going into how to pay yourself more in your home care agency, right? Especially with the times and things that's happening in the economy, it's getting crazy. So we need to know how can we pay ourselves more in our agency, right? So let's get right into it. All right, so the first thing that we're going to go through is the 5 challenges that 90% of home care agency owners face, right? Why your profit is more important than your sales, and why your cash is more important than your profit. And then we're going to get into the 4 steps to increase the profitability in your home care agency this year. All right, so just a little bit about me, right? So I'm an accountant and a business owner just like you. So the difference is I just use my financial background to help agency owners, business owners stabilize their business, grow their business, and take home more cash without the stress. So I'm successful at what I do because I understand both sides of a business, the financial side, and then we also understand the business ownership side. So as an accountant, I'm able to look at a business and I can spot exactly what's wrong and why business is not profitable and or have poor cash flow. And more importantly, we know how to fix it, right? So my mission is very simple. It's to help home care agency owners like you stabilize your business, take control of your finance, and scale with clarity so that you can go stronger, earn more, and finally stop stressing over cash flow. All right, so let's get straight into it. Okay, so the 5 big challenges facing 90% of home care agency owners right now. So the first challenge, the home care agency relies on the owner or it all falls apart. So I see this so many times in the industry, right? So you're wearing all the hats in your company. In fact, you're wearing hats that you really don't even want to wear or that you're particularly good at. So you need to spend most of your time on the things that you're good at and the things that you want to do, right? The second challenge, you as the agency owner, you're constantly battling a catch 22 situation. So, what does this mean when we see catch 22? Well, you can't get more money without growing your business, and then you can't grow your business without more money. Therefore, it makes it more stressful. So, until you actually can remove yourself from the day to day operations, you're going to be frustrated and you're going to be the bottleneck within your company, basically holding your agency back, right? The third challenge is that I see a ton in home care agencies. I see that you don't have a simple way to understand what's working and what's not working in your business. So you get reports like your profit and loss statement, your balance sheet. These reports do not tell you what's actually happening in your business. They're made for accountants and they're not made for business owners. And they can be actually confusing and they don't tell you the whole story. So, to make matters worse, the numbers people, like your accountant and your bookkeeper, they always seem to be speaking a foreign language, and you don't understand that. So, another thing that they do that I don't think a lot of agency owners recognize is your bookkeeper, your tax accountant, is paid to tell you what already happened in the past. They're not made or they're not doing things to move you forward to the future. Okay. So, that's something that you have to remember when you don't understand what's working and what's not working, it causes a major red flag in the company and sets you back a ton, right? So the fourth challenge is that you as the agency owner, you don't have clear goals, right? So how do you know if you're making progress, where you want to end up, if you don't have clear targets? They're not well thought out. You don't know where you want to go, right? So specifically, you don't have targets for your revenue, you don't have targets for your profit, and you don't have targets for your cash flow. This is the same as getting in the vehicle and driving without having a clear destination. We need a map and we need to see that in destination, that red dot to show us where it is that we're trying to actually go to, right? So, what you're going to end up doing if you're in that car and you got no destination, you're going to waste a lot of gas and a lot of time. So, that's why it's important to make sure that you actually have clear goals. So this brings us to the fifth challenge. So the fifth challenge is as the agency owner, you don't have a clear path to follow to have a growing and a more profitable business, right? This is a big deal because there are so many things, thousands of things that you could be doing in your agency or your business each and every day, but only a handful of those things will actually make a difference. So, in three things that really matter, that's your revenue, that's your profit, and that is your cash flow or your bank account balance, right? So, once you, as the agency owner, know where you want to end up, then you need to know how it is that you're going to get there. So, most of the time, agency owners don't have a solid plan of what to do or how to do it so that they can actually achieve their targets. So this is what we see a ton. Now, what I want to know is which one of these challenges are you currently experiencing? So let me know in the chat. Tell me which challenge you're experiencing, how it's affecting you, your agency. Just write it below. Let me know. Okay. And I'm going to check it out. All right. So let's get right into the 4 steps. So the 4 steps to pay yourself more in your home care agency. All right. The first step. This is a big deal. You need to generate more cash than what you actually spend, right? It's not what you make, it's what you keep that matters. Most important, every agency owner, you have to focus on generating more cash from your business, not your revenue and not your profit. It's not what you make, again, it's what you keep that matters. So, how do you generate more cash? Well, you do that by making sure that cash is flowing in your business faster than it's flowing out. This is super important. So, cash flow. Cash flow is the amount of money that's added or subtracted from last month's bank account balance, right? So, let's go back to those traditional income statements. So, a traditional income statement, you have your sales minus your expenses, right? This is what equals your profit, but that does not tell you the whole story within your agency. So once you make a profit, you still have to pay your taxes, which is a big deal. Whatever percentage of taxes you have to pay, you still have to pay that. You have to account for uncollected revenue. So if you have clients that haven't paid you, this is a part of that. You still have to pay owner withdrawals. That's paying yourself. You still have to pay yourself, and you still have to pay down debt, and not to mention buying assets if that's something that you utilize, vehicles or other properties within your agency. All those things take cash. So it doesn't matter how much you make, your sales or your profit. What matters is how much you're actually keeping, which is your cash. Again, every agency owner must focus on generating more cash from your business, not your revenue and not your profit. Okay. So remember, all of the answers are actually in your numbers, but a lot of times agency owners aren't looking at the right numbers. So again, like I said before, when we were talking about the 5 challenges, you have an accountant, you have a bookkeeper, but they are paid to tell you what happened in the past and file your taxes. They are not equipped to help you find the right numbers that drive your profit or tell you what to do to move the needles within your agency, right? They're not there to give you future information to move the business forward, right? Especially in this time, in this economy, that's what you need. So you need to focus on just a few key numbers. Then you'll start to understand which numbers are preventing your profit and your cash flow leaks the most. Okay, now remember, not all of the key numbers is what you need to pay attention to in your financial reports. So that's what makes them really confusing, right? So in step 1, we said you got to generate more cash than what you spend, right? So I'm about to show you an easy way to measure how well your business is doing at generating consistent positive cash flow. All right, so we need to find out where you've been. And then we need to find out how well your business was at generating cash flow last year. What happened last year? But instead of measuring cash flow, the end result, we're going to measure what drove your cash flow last year. So you need to pay attention to what drives your cash flow. And there are 14 drivers of cash flow that we actually look at according to your industry. So once you understand the reason that your cash flow is off, you'll be able to take the next steps to fix it. So this is the 14 drivers of cash flow. These are the drivers that we look at. Now, don't get overwhelmed because I'm about to break them down. We're not going to go into the detail of the first, 10. but I'm gonna break them down. All right, so we got your revenue drivers. Your revenue drivers consist of your leads, your conversion rate, your retention rate, your purchase frequency rate, and your average transaction value. All of these first 5 drivers, they actually drive your revenue, okay? Then we have your profit drivers. So the profit drivers that we look at, your revenue is at the top because we bring this straight over from the revenue drivers. This is the total of your revenue. Then we have your cost of sales. Then we have your payroll expenses, marketing expenses, and your overhead expenses. These 5 drivers drive your profit. Very important. Now, most agency owners and accountants stop here. Your profit only exists on paper, hence profit and loss reports, right? So how do we bridge the gap between what's on paper and how much cash you actually have? Well, look at here. We look at what we call your cash flow drivers. These 4 drivers are what we call your cash flow drivers. Now, we have an increase or a decrease in your accounts receivable balance. We have the second one, which is purchase or sale of assets. The third one is an increase or decrease in debt. And the fourth one is investments or withdrawals from owners. Now, if you want to start paying yourself first, I'm going to show you how to do it. Now, let's walk through what the cash flow drivers really are. All right, so we have the first one, which is your accounts receivable. This is the amount owed to the agency from your client. Now, if a client owes the agency, your available cash goes down. If a client pays you, the agency, what they owe, your available cash goes up. These are so important. So I just want to reiterate again, your accounts receivable. This is the amount owed to the agency from your client. If a client owes your agency, your available cash, your money goes up. If a client pays what they owe, your available cash, if a client owes the agency, your available cash goes up. And if a client pays what they owe, your available cash goes up. All right. Now, this is your asset. So this is the amount of tangible and intangible items that the agency either buys or you sell. So home care agencies, you can have assets that you buy yourself, vehicles, buildings, whatever it is. So if an agency buys an asset, your available cash goes down. If an agency sells an asset, your available cash goes up, okay? This is debt. This is the third driver of your cash flow. This is the amount of cash that's borrowed for use in the business. So if an agency pays down debt, so if you pay down debt, your available cash goes down. If your agency uses debt, so you get a loan, your available cash goes up, right? And then the fourth one is your owner investments or withdrawals. This is the amount of cash that the agency owner puts in or takes out of the business, which is a big deal because we want to take out much as we can, right? And the business still be financially healthy. So if the agency owner withdraws cash, your available cash will go down. Now, if you, as the agency owner, you invest cash into your business, your available cash goes up, okay? Now, all 4 of these drivers equal your cash flow, okay? So hopefully you was able to get, some information from that. Hopefully I didn't go too fast. Now, all 14 of the drivers that we went over, all 14 of them actually drive your cash flow, okay? So your revenue, your profit, and your cash flow drivers. Today we're going to be looking at cash flow. All right, so we went over the first step was to generate more cash than you spend. The second step, we have to actually create targets for your profit and your cash flow. Now, according to the SBA, 50% of all businesses never see their 5th year anniversary. 5th year. That's a big deal. So they don't make it to 5 years. And it all boils down to the fact that they actually ran out of cash. So, however, there's a predictable way to prevent this failure. So in the first step, we know to make cash flow your number one focus, not your sales and not your profit, right? So we also know which numbers to focus on. So there was a total of 14 drivers, but we're going to focus on the 4 drivers of cash flow. Now, in this step, we're going to set targets for the next year using those 4 drivers, okay? All right, so I'm going to pull up my driver worksheet in just a second. But first, I want to show you the steps. Okay, so the first steps, when it comes to setting targets for the 4 cash flow drivers, this is the first step that you're going to do. First, you're going to find out what you did for last year for each of the 4 drivers, okay? So we need our past. The second step, we need to create realistic targets for this year for each of the 4 drivers of cash flow. So we need to know where we want to end up realistically. The third step, we need to add up all 4 of the drivers of cash flow to come up with your cash flow targets for this year. So this is what we're going to be shooting for, right? And then the fourth step is to ask yourself, do I like the target? Because you have to like your targets or you're not going to be motivated to get to that actual target, right? If so, great. If not, you need to determine which of the 4 drivers of cash flow you want to change. All right, now, this right here, this is our cash flow. This is our driver worksheet. But on the screen, this is our cash flow drivers. I want to show you this. What's important about this screen is what you see at the top, hopefully you can see it really good. We have last year the profit after, revenue and profit, expenses and everything. The agency profit $378,000, right? Now, we're going to go to the first driver. I have it highlighted right here. The first driver is an increase in accounts receivable balance. So we spoke about what accounts receivable, right? So there were clients that had outstanding debts of $100,000. So already $100,000, that's going to take away from our cash. All right, then we had the purchase of assets or sale of assets. So we purchased $25,000. We purchased a vehicle. This is a hypothetical agency, Jane Doe. She purchased $25,000 for a vehicle, and then she sold an asset, probably another little car, for $10,000, right? Now, then she paid down some debt. So when she paid down debt, it took cash from her. She paid $100,000 of debt, which took away $100,000 in cash flow. Then she added new debt of $100,000, which added $100,000 in cash flow. Her cash went up, right? And then she was able to take out $250,000. So this $250,000 was an owner draw. So when she took it out, it decreased her cash flow. Now, what I want you to see is right here. When we see cash flow, all right, right here, it says $13,000. So the business still had $13,000 in cash flow. But when we look at the bank account balance at the end of the year, it was $113,000. So the business is pretty healthy right now, right? Now, I want to pull up the driver worksheet. I want to show you something. Okay, so this is the driver worksheet right here. As you can see, this is the cash flow driver. I hope you can see this is really good. Yes. Okay, so this is our driver worksheet. So last year, we already seen what happened last year. We brought over a profit of $378,000. Now, this year, we're going to set targets for our cash flow drivers. All right. So we already set our targets for our revenue and our profit because we're going straight to cash flow. So the profit for this year so far from what we're shooting for is $554,400. Now, let's go ahead and set targets, right? So let's say we had clients that owed us $100,000. Let's say those clients paid us $100,000. So I'm going to go ahead and put this right up in here. Let's say they went ahead and paid us $100,000. So that means that increased our cash. It increased. Remember, the cash goes up when your clients pay you what they owe, right? Now, let's go down to the assets. Let's say for assets, we purchased $100,000. We got a new building for our business. So that was $100,000. All right. So when we purchase something, it takes away our cash, right? Our available cash goes down. Don't forget that. All right. And I'm going to scroll down a bit. Now, let's say we didn't sell any assets, but let's go down to debt. Okay. We want to pay down $100,000 in debt, right? Because we had debt that we had a loan we borrowed. So we want to pay this $100,000. So now we don't have that, but we don't want to take out any new debt. No new debt this year. We want to pay what we owe and maneuver on from that. So when we pay down debt, we actually lose cash. Our cash goes down, right? When we pay debt. All right, and then let's say this year, instead of paying ourselves $250,000 like last year, we want to raise, right? So we're gonna put $375,000 in here. We want to take 375 out of the business. Okay, now let's see what we're working with. So when we come down here, we see your cash flow. Remember, your cash flow is the amount of money that's added or subtracted from last month's bank balance. So your cash flow right here is flowing pretty good. This is after everything that's occurred. This is what you have left. And then let's look at your bank account balance. Your bank account balance grew. It's healthy. Now you can see your bank account balance. Everything has been accounted for. Now just imagine if you took out 375,000. When you set these targets for your company and use these drivers, you could change anything you want on here, right? Let's say you had purchase of assets. Let's say you didn't purchase any assets and you put that at zero. When we come down here, your cash flow is $179,000. What you can take additional money out and put it wherever you want to. You may want to pay yourself more. You may want to pay yourself $500,000, right? Because you deserve it. All the work that you're doing, you still have a healthy cash flow, depending on your agency, right? You still have a healthy cash flow. Your bank account balance still increased. So I just want to show you the power of just changing one or two things within your agency. It makes a difference, a huge difference. Okay. And then I know you'll see inventory on here, but inventory is not pertaining to you guys' industry. So that's why we skipped over that, okay, in case you're seeing it, so you won't be confused. But just changing a few things in your agency will make a difference in the cash flow, and how your agency is actually functioning, okay? All right, so I am going to minimize this. If you guys have questions, put them in the chat, and we'll get to them when we get to Q&A. I apologize, though. But we'll get to it when we get to Q&A. And then if I need to bring this worksheet back up, I can bring it back up for y'all, okay? Because that's the exciting part. Okay, let me get back. I don't want to rear off. Okay, so now this is what we just went over. I just was showing you the profit that we set, $554,400. That was the profit. That's the projected profit from the targets that we set. And then we went and set targets for our accounts receivable. So again, remember, accounts receivable, this is the amount of money that your clients owe to the business, right? So they owed $100,000 last year. This year we said we collecting our money. So we put $100,000 right here because we want to get that money back, right? That increases our cash flow when we collect accounts receivable. So when your accounts receivable decrease, it increases your cash, okay? All right, then we had purchase of assets, remember? So last year they purchased a $25,000 in a vehicle. Then she sold one for $10,000. But this year we're gonna get a building. So she got a $100,000 building. That's what she purchased. So it took away from her cash flow, right? Then we had the paying down of debt. So last year when we left off, we took $100,000 in debt. So look, we just want to pay what we owe. So we paid $100,000. We didn't take out no more money. So when we pay debt, that takes away our cash. And remember, when you get debt, it increases your cash, right? Because you're using someone else's money. All right, now, then we had the owner's draw or owner investment. Last year, Jane paid herself $250,000. Well, this year, she decided she wanted to pay herself $375,000. So when she paid herself, it took away from her cash. And so her cash flow was $79,400. After everything that was done, she still had a healthy cash flow. And then when we look here, we see that her bank account balance at the end of the year was $192,400. Awesome. Now we can see where we bridge that gap between what's on paper and what's happening in the bank account. This is what we should see in our bank account at the end of the year. $192,400. A healthy business. Now you don't have to worry about where you're going to get cash from, right? You just paid yourself. She paid herself $125,000 more than the previous year. She's very happy. Very. So hopefully you guys like the cash flow drivers. They're exciting, especially when you start playing with it and what you can do. So let's go ahead on to the next step. All right. So we went through step one. generate more cash than you spend. Step 2 was to create targets for your profit and cash flow. Step 3 is keep score. Now remember, we just set targets for your profit and your cash flow. So now we got some direction. We know where we're going. We're not in a vehicle driving with no destination, right? We got a map. So now we got to keep score. So how are we going to do that? You can't win a game if you don't know the score. That is so important. Now, you have to stop managing your agency by the seat of your pants and start managing it by the numbers. So as long as the decisions are based on your intuition, how you feel, what you think, you're the bottleneck, right? You're the one that's holding your agency back, and you never can have freedom in your business, right? So the key is to build a scoreboard that tells you exactly which levers to pull and increase your profit and your cash flow. Now, the scoreboard allows you to easily and quickly see how well your business is doing and what's preventing it from hitting your targets. Now, it also gives you an early warning system. So when things go south, you can quickly fix it with no surprises. I love the scoreboard. It's my favorite. So this also allows you to be the owner and the CEO instead of being an employee, a caregiver, a RN, an LPN in your own business. Now you can be the boss, right? So the right scoreboard will allow you to do that because it's going to free you up from worrying if it's all going to work out this month to knowing exactly where you stand day by day, week by week, month by month. It's going to give you all of that. So the key is to make sure that we build a scoreboard around the 14 drivers of cash flow that I just showed you. And then we're going to forecast where you think you'll end up by the end of the year. All right, this is what our scoreboard looks like. Hopefully you can see this. Now, you see red, green, and yellow, right? It looks very familiar. So red, green, and yellow, just like the stoplight, red means to stop, green means to go, and yellow means to proceed with caution. So this is Jane Doe Home Healthcare Agency. This is her healthcare agency scoreboard. So as you can see, I hope you can see this. It looks tiny, but I hope you can see it. In red, we have total hours, right? So total hours is right here in red. And as you can see, last year, and I don't know if I can make it bigger for you guys, but I'm gonna do it like this. Last year for her total hours, the target was 60,000 hours. That's what she wanted for the year. Last year was 60,000 hours. That's what she made. Her target this year is 75,000 hours. And I'm looking right here. Now, year to date, she's actually at 15,800 hours. Year to date, 15,800. But I'm forecasting her. When I do my forecast and I'm looking at her company, I'm looking to see where I think she will end up. Now, this is not what we want to happen, but this is what I see that may happen. I see her forecast is at 59,900 hours. So this is in red because her target is 75,000. Year to date, we're in the month of February and she's at 15,800 and she slowed down a little bit. So we have a problem. So that's in red because we need to focus on total hours, right? We need to fix that because this determines what we're going to make in the agency. Now, when you come and you see yellow, and I want to back up a little bit. I'm moving a little too fast. So this is a scoreboard. What you see at the top is called profit drivers. So these boxes here are our profit drivers. These are the drivers that I went over with you before when I started telling you overhead expenses, marketing expenses, payroll expenses. These are those drivers. They all equal your profit. When we look below, we see your cash flow drivers. These are the drivers that drive your cash flow, the ones that we went over just a bit and we set targets for, okay? All right, so in the profit drivers, we looked at total hours because total hours in your agency affects your revenue, right? This directly affects your money, how much money you're going to make, right? So the second thing that we see is yellow. So yellow means to proceed with caution. So we see her cost of sales is yellow. Okay, so last year, her cost of sales, and cost of sales is how much for home healthcare agencies. I like to use cost of sales. I don't look at payroll. Payroll to me is considered cost of sales. And why is it a cost of sale? Because before you can even get paid, someone has to be paid to provide the service. So you have a caregiver, right? Well, let's say for that week, however, Miss Susie pays you $3,500, and maybe half of that goes to your caregiver. Well, in order for you to have revenue from that, the caregiver had to provide the service, and you get additional. So from your top line, your revenue, your cost of sales comes directly out of that, and what's left over, that's what we utilize. Okay, your cost of sales is big. So last year, her cost of sales was 74% high. Now, according to her and for her, when we look at her numbers, it's pretty high for her agency, but it's in yellow because this is something that we want to watch. So last year, her target was 74%. When you look here, it was 74%. Now, this year's target is the same, 74%. But year to date, she's at 73%, and we forecast her to be at 73%. This is in yellow because it's kind of high to us, and this is something that we want to fix. So we just got to proceed with caution. We're just watching this to see what we can do. Now, when we get down to your cash flow drivers, this says days still outstanding. I hope you guys can see this. So days still outstanding last year was 7 days. So your days still outstanding is how long does it take your client to pay you? This is how many days it takes for a client to pay you. So if a client owes you $50,000, let's bring it down a little bit. If they owe you $10,000 for 2 weeks, how long will it take to pay you? So that could be 14 days, right? They may pay every 2 weeks. That's 14 days. Maybe if you have insurance and it takes 30 days or longer, your days still outstanding could be 30, which is very high, because the longer your days still outstanding, the longer you're without cash. Okay. Now, the target that we set was 7 days. Okay, because she gets paid weekly. She deal with private pay clients. They pay every week. So it takes her about 7 days to get the cash that the client actually owes. Now, year to date, she's at 10 days. So we got a problem. Clients are paying late, but I forecasted her to be at 9. But the goal is for her to be at 7. So this is in red because we need to collect whoever has outstanding balances, and we need to fix the problems that we see here, right? Now, hopefully, you guys, the scoreboard is my favorite. I love the scoreboard. So I'm going to go on to the next screen. Hopefully, you was able to get something out of that. All right. So we went through the first step, generate more cash than what you spend. Create targets for your profit and your cash flow was step 2. The third step was to keep score. So I just showed you how to keep score. I showed you how to set your cash flow targets for your particular agency, right? Now, the fourth step, we got to create an action plan. We need to create an action plan because we need to put our feet on the ground. We got to get to work so that we can hit these targets. Now, let's get right into it. Okay. So, as you can see, if you don't understand the 14 drivers of cash flow, right? If you don't understand that, on each and every day, right? And let me just move this right here. Okay, so there are thousands of home care agency owners that are stuck within their agency, right? Now, you can't grow because you don't have the cash to reinvest and grow, and then you don't have the cash to hire more people, increase your marketing, or buy assets, which is a big deal. So this leads to you getting stuck working in your business rather than on your actual business, right? Now, you're stuck because you're working too hard, because you don't know that there's a problem and you don't know how to actually fix the problem within your agency. If you want to break this cycle, you need a plan of the most important next steps to be done each month to move the profit and cash flow gauge closer to the targets you set for this year, right? So this is how you have a business that generates consistent, positive cash flow. Now, this is what our action plan looks like. So as you can see at the top is Jane Doe Healthcare Agency, the action plan. We see the objective, we see current results, next steps, the owner, which is who's going to be responsible, the due date, and any notes we have. Now, as you can see, when you look here, it says the first objective for her agency, she needs to decrease her cost of sales from 74% to 60%. So currently she's at 74%. This is something that we give to you when you work with us. This is a deliverable. You have this. And so the next step that she needs to do, she needs to reduce overtime and unnecessary downtime. Another step that she needs to do, she needs to improve her employee retention to lower hiring and training costs, right? She has a retention problem. She needs to fix it or it's going to cost her more and more, right? Who's going to be responsible? So in order to reduce the overtime and unnecessary downtime, we're going to have Jane responsible for that. And then we have the due date for April 1st of 2025. So when we meet next month, she needs to make sure that this is taken care of, or we need to talk about it to see what happened if we was able to complete this. Because we want to work month to month or week by week with some of my clients. But month to month, that's how you fix your agency. That's how you know what's working, what's not working, what to do and what not to do. We don't wait till the next year to see the problems and fix them. Then we got to do all, it's a longer cycle, right? The second one was to improve the employee retention to lower hiring and training costs. Who's going to be responsible? Well, Kevin is going to be responsible for that. And he's going to let us know what occurred. Did this get better? How is this working out? And his due date is April 1st, right? And then when we come back and meet, then we have notes and we update that. The second objective for her, when we look at this action plan, she needs to increase her total hours from 60,000 to 75,000 hours. When we look at the current results tab, we see that she's currently at 60,000 hours, right? So how are we going to increase this? Well, we need to increase the number of leads by 15% by creating targeted marketing channels or improving existing channels. Who's going to be responsible? Well, Cynthia is going to be responsible for that, and that's due April 1st as well, too. The second thing we need to do, improve the conversion rate of her leads by 10%. So we're getting leads, but we're not converting them. The conversion rate is low. So we can increase it by 10%. That's going to allow us to bring in more hours for the agency, which equals more revenue for the agency, more profit, more cash flow, more take-home pay for you as the owner, right? So this is what our action plans look like, right? So you're not in the dark. You don't have to figure out and guess. We're going to create an action plan step by step of the very next best steps to take within your agency. Now, remember, there is a predictable way to grow your profit and your cash flow that enables you to make more money in less time with less stress. So growing your profit and your cash flow is inevitable when you understand how to move the right numbers. Now, I want to show you how this system worked for one of my home care clients, right? So this is Monica's success story. So this is how we helped transform her agency. All right, so here's Monica. She had high payroll costs. So her caregiver wages ate up most of her revenue. She paid herself whenever she wanted to, if anything was left. And then she was stuck in operations, so she was unable to delegate. She couldn't delegate. She was always putting out fires. And then she had no financial clarity, right? So she had no clear understanding of where the money was going or why it wasn't growing. Now, first problem. Her payroll costs were 79% of her revenue. So it made the business unsustainable. 79%. So what this means is if her payroll cost is 79% of her revenue, then for every dollar that the agency takes in, 79 cents went out the door. 79 cents left out of that dollar, and we had what was left, and that is expenses. So what we did, the solution, we came in, we reduced her payroll cost to 42%, so we freed up her critical cash for growth and stability. So what was the second problem she had? She was charging $23 per hour, and she was paying caregivers $16 to $18 per hour. As you can see, there was not much room for profit, right? And there was no money left to pay herself consistently. She, again, getting the scraps. So what do? Our solution, well, we increased her rates from $23 per hour to $35 per hour to align with the true value of her home care services and the cost of running a high quality agency. We increased her margins, it freed up her cash flow, and it allowed her to start paying herself consistently without having to reduce staff wages or compromise quality of care. Now, this is so important because you look and see she was charging $23 per hour, but she was paying her staff $16 to $18 per hour. That's a big deal. We solved the problem. Instead of coming there, decrease staff wages in this economy, decrease staff wages is crazy. I don't know how you're going to be able to do that. I guess it depends on where you are. So we solved the problem. We increased the rates. She wasn't at market value with her rate and according to the quality of care that she actually provided. This is so important. You have to understand your worth as a home care agency owner. You need to understand what that work looks like. We're running a business, right? The third problem, she was trapped in her daily operations. Like she was stuck in the office, constantly putting out fires. So she's taking calls, staff, clients, everybody. And she was unable to focus on growing her business, right? So the stress was taking a toll and it felt like scaling was actually impossible. So what did we do? Well, we helped her master delegation. She had to learn to delegate, not take everything and keep it on her plate. She had to delegate. She had to implement systems. How did we help her do that? We helped her be able to hire. She was able to get her an assistant to come in and take some of them hats that she was wearing off of her so that she could go and be back in the field, right? So she didn't have to do the day-to-day grind. She had the right team in place so she could step back and she could focus on strategy and lead the agency toward growth, right? She ended up making management decisions now. The fourth problem was she had no financial clarity. Her income depended on whatever was left over, and that uncertainty created tension at home and anxiety about the future. Because it can get rough when your business is not doing what it's supposed to do. Then you got responsibilities at home. It's a lot, right? So with our CFO level support, she now makes data backed decisions and she pays herself first, right? She ain't waiting until the last minute or what's left to pay herself. She pay herself, all right? And she confidently steers her business toward growth in this economy. So she's moving forward. So that's a little bit about Monica's story. Now, it's your turn to grow and thrive. Are you ready? Okay, so this is what it looks like to work with me. So the first step that we do, we set targets for your company, right? We get to know you, your company, and then we set targets based on where it is that you're trying to actually end up. The second step, every month I update your actuals and analyze your actuals. So what this means is like your reports, everything that's happening, I'm looking at your stuff in real time, telling you what's happening, right? Then step 3, we create forecasts. So this is what I create to see where your agency will end up. This is a forecast like I was showing you on the scoreboard. This is where we don't want you to end up, but this is where I see the direction that your company is actually going in. The fourth step is we actually update the score. So we do this monthly as well. So that scoreboard, that's something that you get as a deliverable every single month from us, and it's updated with the very next steps and the things that we're actually focusing on. Step 5 is we actually create objectives. So that's the action plan. We create objectives, the best next step that you need to take within your agency to get you to the next level that you actually desire. And then step 6, we give you your next steps, which is the action plan. And that's actually a deliverable too, okay? So all these steps, they help us because we're looking at your revenue, your profit, and your cash flow. Now, I want you to remember your takeaway today. Remember this. There is a predictable way to grow your revenue, your profit, and your cash flow. This will enable you to make more money in less time. This is how we make more money in less time, y'all. Y'all got to remember this. We know what we're doing. We're not guessing, right? And with less stress. So your profit and cash flow growth is inevitable. It's going to happen when you understand how to move the right numbers. Now, these are my next steps for you. So get familiar with the driver's worksheet by setting targets for this year using the pre-populated data from last year. Now you can put your own numbers in there, and I advise that you do that, and then put where you want to go. Override your last year's numbers with your numbers. Set your targets for this year. Then you need to start tracking where you think you'll end up on the scoreboard. If you want a CFO like me to do this for you each month, we can get on a call, okay? Now, Q&A. Anybody have any questions, any concerns, anything you guys would like to say? Let me see. Any questions? Okay, no questions. Well, listen, if you guys want help in transforming your agency, let's get on the call. There is my QR code so you can scan it. And then it'll take you to scheduling a call with me. I look forward to speaking with you. I'm super excited. I didn't see any questions. I was hoping that we could get back into the driver worksheet, but if not, that's okay. Whoever was on today, I'm going to send you an email with the driver worksheet, okay? So that you can have it for you and your agency. All right, and I'm going to check one more time. I'm just going to check one more time. Okay. All right, so thank you guys for getting on, taking the time to watch. I hope and I pray that you learned something today out of all the things that I shared. You guys have a blessed rest of your day and a blessed rest of your week. Bye, y'all.